Good morning, everybody. This is Dee Dee with Power 3 Trading. Thank you for joining. I'm not here just to teach you the strat, but to teach you how to profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith at Smith's in the Black channel, Rob in the Black on Twitter, or at cpagroup.com. So yesterday we talked about the Tesla trade, and I was struggling to draw my broadening formations just because I didn't like the trade per se. And now I see why. So let me see if I can see this, and I'm just going to do something here because I don't know if you guys saw this, but I saw this in pre-market, and I said to myself, seriously? So when we do our, on the 18-minute only, I'm showing the pre-market data from yesterday. And so when we do our review, like now, we're doing it here, right, in 7:15-ish to 8 o'clock. So here at 8:12, 7:54, 8:12, Tesla does this. It trades down in pre-market, right down to our broadening formation that we drew. So I'm seeing this happen right before the market opens. And I'm saying to myself, what is the market doing? Because the broader market wasn't necessarily doing this, but Tesla did. And so it opens up, guys, and you see here in the 3-minute, it opens up, hits this lower broadening formation, okay? So we drew this broadening formation off the 90. This is this 2-down bar. This was this outside bar here. And then we did another broadening formation off this 2-down bar back a ways. But here's where it hit, right? So this is this outside 2-down bar, this outside bar. This is this diagonal line here. This is our trend line. So it trades down to that, crosses over, and then holds right on this next 3-minute flip. So I see this and I'm thinking, okay, what's happening right now? Okay, this is going to be off, guys, because we have this pre-market on. But what I saw was this hit, right? So trade down. I'm going to take these pre-market off. So just keep that in mind. It's trading down in pre-market, right? So let's go back to regular trading. All right, so it hits our broadening formation, right? Trades up, then it crosses this line. Remember, this is this 90-minute bar that we drew off of this 2-down bar. So this is the trend line that we drew off this 2-down bar back here. All right, so it hits there and trades above it. So I'm looking at this and I'm saying to myself, this looks like a gap or reversal, maybe. Let's hold off. So I did not take this move. Remember, we trade reversals off broadening formations, but I also have my confirmation, which is CCI. So although CCI crossed over here, guys, and then above 0, which is where I like to get in, above 0. Now I'm in what I call my buy zone. This candle was still forming, and it was trending down on the 18. So I stuck to my guns. I did not take this entire move. Missed it. Well, I can't say missed it. I didn't take it, right? I saw it. I didn't take it. Why? Because I have to stick to my strategy. When you see moves like this and FOMO gets in, yeah, sometimes they work, and then, yeah, sometimes they don't. I've experienced that. So that's why I had to come up with, hey, you do this and you don't veer from it, else you're taking risk. And what happened was, because I would do that, I used to do that. And what was happening was when it failed, I would say to myself, man, I need to change my strategy. And I cannot tell you early on how often I was changing my strategy. And it wasn't because the strategy wasn't good. It was because sometimes it works and sometimes it doesn't. And so we have to accept that in the marketplace. So using CCI, I said, I like CCI best when it is above 100 on the 18 long or below 100 on the 18 short. And so that's what I look for, guys, because I don't have to take, and especially if you're trading something like a Tesla, I don't have to get in at the bottom or at the top of a move. And I'm okay with that. And so, but here's what happened next. So on this flip, now I have an outside bar, right? So we have to be careful with that. But what did we say when we did our plan? We said long above 756. If price trades inside 18, we're going to avoid. So now I'm looking for price to trade above 756. And in my mind, I'm saying, 3. We're going to go outside. This is a 2-day, but you can see it took 2 days. So what I was thinking was if price trades, because remember, we drew this up. We said if price trades above this range, which is 756, wherever that was, it's 771, but we said 756, here we go, 756, so this 2 up bar here, then I'm looking to go long. Now, think about that. This is the open. We're in this range. And so that's what I'm thinking about. If we can get this, then there's a potential 3 on the day. So we already seen that it gapped down. So it went 2 down and traded up. Now you're thinking a potential 3. But here's what I did. This was a 3-2, but it was close to 756, guys. It was close to this broad information. And so I hesitated. I didn't get in here because I was thinking, it could hit this broad information and come back down. Let's let it clear 756 and then I'm going to get in. What does it do? It hits 756 on this 3-minute candle and reverses. Then it goes inside. And then when it crossed back above, that's when I entered. So it came down some and then it crossed back above 756, came down, hit 755.37, 755. So it's still triangled out on the shorter time frame, came back up. Now this blue line I drew later. I'll remove that. All right, so came back up, but then it started to form this doji here, guys. You are trading up on the 18. It started to form this doji, came back down, crossing back over. This is at 10:18. If you look at it on your 15-minute candle, that's this move. And so you have to be aware of when things are starting to TTO on you. And so when it crossed back over here, I exited the trade. So it wasn't the best entry because I didn't get into around here. So, but as soon as it's crossed back down, I was out of this trade. Okay. And these are the things you have to think about. Can this continue to go? Sure. But this is 10:21. You're close to a 60-minute flip. So anytime I'm in so I like to trade on the 18, but think about it. The last 15 minutes of a 60-minute flip and the last 18 minutes of a 90-minute flip, I'm more aware of what could be potentially a TTO. It may go 62 up, 92 up to continuation. But when you're trading options, you're losing value. And so you want to be aware of those moves and make a decision. For me, I don't hold those. I just get out and then I look for a continuation at the flip. All right, and so this is what you saw on the 15. It then went inside. So this is your 15-minute candle. So you can absolutely use a 3 and 15. Love that view. All right, I'm on the 18. What I saw was a 2-shooter, 2 down, CCI hold. Remember, we drew this broadening formation here off of the this outside bar and this inside bar. It held up, right? So I am still good. Oh, sorry, that's this one. Apologies. This is the high of this 2 down bar to this 2 down bar. Because if you, yeah, I posted that. If you watched that video, if you're with me yesterday, what we talked about was a 3, 2, 2 up potential. And I said we have to take this high, and that's where I got 756 from, because this is 755.26. This is 753.36. But in my view, I said if price trades above this range, so that's where 756 came from, it would go 3, 2, 2 to the upside. And so you can see it traded down here to back to that range, that broad information, and held, guys. So still good. But I got out of this entry here because I don't know. I don't know if it's going to hold. So this is what I see, right? Shooter forming. I'm out. This comes down, and now I'm waiting. So again, if you're, and we'll just do this so you can see that. If you trade off the 15, this is trading inside 15. This is a 2 up candle, but it closed down. Inside, this is a 2 up shooter, 2, 2, 2 on the 18, 2, 1, 2 on the 15. This is at 1042, goes inside. Then it forms this 3 at 1045. This is this flip. When price crosses above this high, I'm into this position here. So this is at 1064, I'm sorry, 764.24. This crossed up 764.85, just enough to take your position, trades down, just like the market does, but you're good. Why? You're in a 2-2 situation. For this to fail, it'd have to go 3. So when we're looking at these 2-2 potential failure, this is where I use CCI. I feel pretty good about this. Why? Because CCI is trending up and it's above 100. I'm holding my position here. And what does it do? Trades up, trades up, trades up. You never get a 2 against you on the shorter time frame, guys. You never get a 2 against you. I drew this line here because it was still going up. So what I did was I looked back on the daily, because we're in this range, and this was this little doji we talked about before. And I just drew a horizontal line here because price was trading up. It took out the 2-day. And I was like, oh boy, this is interesting. It went 3 outside on the 2-day range. So now I have this guy, 787.35. I said, it's a long way up, but could it go? I don't know. So once I drew that, I look for potential reversal patterns when price started to stall out here. So it went 2 up. The next flip was at 1145 or 1154 on the 18. So when price traded up here, I got a little excited. I was like, wow, this thing may continue. It formed this doji here, looking at my CCI, comes back in. I'm out of this position. I don't get back in, guys. Let me flip back to my 90. Here's where the longer time frame is important. This is your 90-minute flip. So here I'm out, right? Why? This is a big move. And I think I'm for those of you who follow me every day, you know, I talk about this. When you have this, I just flipped to the 3-hour, guys. When you have this 3-2 on a 90, you have to think that exhaustion is coming. This is 2 90-minute candles outside 3 hours. So when price started to come back into that broadening for really just a trend line that I drew on that daily, I was out. I was like, yeah, this is going to get some people caught. What's happening now on my 18-minute? It's starting to trend down, right? New high, not a new high. New high, not a new high. So I am not taking this. right? These are just some of the nuances. You're looking at this inside bar and you're saying, oh yeah, I'm gonna get in here. Oh no, exhaustion. 1230 flip, guys, right here. And the price and market comes in. Okay, so that was Tesla. And this is why I am so focused on drawing my broadening formations. I have my plan in place. I try to avoid getting too eager about the market. And the way I do that is stop focusing all of my attention at the open on this move and focus on what does the momentum tell me. It did not flip until here. And now I'm using my broadening formations and the actionable signals. What's the strat? Timeframe continuity, the three universal truths: timeframe continuity, actionable signals, broadening formations. You are going against full timeframe continuity, but you were certainly in timeframe continuity. When you look at this on the daily and the weekly, you were good. It flipped on the weekly at around 773.84. That was the open, right? Yeah, 773.84. So that was about here in this range. Yeah, it happened in this range. You went green on the week. 1118, still good. That was this 90-minute flip. It happened right in here. And so you went green on the week, still good. But on the longer time frames, not so much. All right. So, and of course it went green on the month, but we're going to talk about today. All right, so that was Tesla. NVIDIA, we did not get a chance to map out, but you had here something very similar. You had the outside bar, it crossed back above. Now I'm looking for my entry. Guys, you screen time, screen time, screen time, screen time, screen time. Why? Because this will just hurt. There's not a clear direction when the market is going outside bar, outside bar, outside bar, two up, two down, inside bar, then maybe you have a move here, then it comes back down. This is where, when you have these first 18 minutes, I'm looking at CCI and saying, oh, where do I want to get in? And then once you get your level, right? So if we had drawn this out, once you get your signal where you're wanting to go long in a position, right? So if we had done this and you say, I know I want to go long, right, above this range, and it's got a hold. All right, so I want to go long above the high. So 190, I'll just throw this here for grins. Once we know we want to go long above this range, the high of the day, now it's about when. It's about when. And so I drew this line here because I want, price has to hold, once it crosses above this line, it has to hold this lower broadening formation. And so you see here, it traded up to that line, right? Right here, triangle layout. So I'm at 3, remember, just like Tesla, 3, 2. I want my triangle to see if this is going to continue. It happens right here. Inside bar comes down, still good, still good. I want to take this position, but it's got to take the high of the day. It comes back above it, trades down, it holds here. I'm out, but it holds here. But now I'm looking, why? Because I don't like the CCI. It holds here, and remember, my rule is inside 18, I'm avoiding. I'm not going to try to trade inside this range. So I'm looking for this break. And what does CCI do? It trades back above the high, the prior day's high. CCI is good. CCI is still good. So not shorting here, right? Because CCI is above 100 on 18. So I'm not shorting, I'm just waiting for the TTO to complete. And then you have your continuation. Okay, so you can go inside 18, inside 15 with CCI above, but you have to be careful because you want to know what's the next flip on the 16 and the 18. Okay, you have to understand the next flip on the 16 and the 18. In this case, this happened at 11 o'clock. Next flip, CCI had crossed over right here. Still good, baby, still good. You see that? So CCI had not crossed over in this range, but it did cross over 100 in this range. We love it. Take that. Okay. All right. So that was a little simpler than Tesla, which is a nightmare. But let's look at what's going on right now, though. Okay. So I just tweeted a little bit ago before we got started. Day trading, if you're trying to day trade, guys, and you're still learning, I urge you to spend more time on the screens and less time trading. I kid you not. I've been day trading now 4 years, and it was not a simple transition. So I'm telling you from experience. I see, guys posting all of the beautiful wins. It ain't always beautiful, guys, especially when you're just starting. So don't have those same expectations if you haven't put in all of the time. And also, I've been trading and investing, and I think I shared this with you guys before. I'm a former licensed broker. I had my Series 7 and 63 back in the early 2000s, where I worked for an investment firm. So yeah, spend a lot of time in the markets, guys. So just think about that when you're kicking yourself because you're not getting it. It takes time. So don't get too caught up, but it's not as easy as some would like it to believe. It's just not. And so when you have a double outside day on the cues, I mean, you're looking at this market and saying, what the what? I mean, I can't explain it other than when we talked about this a couple weeks ago, price action had hit our broadening formation. Close this. Price action had hit our broadening formation, right? And so there was some exhaustion here. We had drawn this broadening formation from this outside bar to this inside bar right here, right? So this one outside bar to this 2-up bar. So we draw our broadening formation, and price is now trading back above that range, guys. So it hit here and reversed. I can't say that that's going to continue an uptrend. You are inside the month. When you're trading inside month, there's a lot that can happen between, I mean, we're just in day 2, day 3, right? so we have a lot of month left. And for that reason, we have to be careful. Today, guys, is non-farm payroll day. What does that mean? Volatility. Didi will not be in the market, maybe not until the top of the hour, because there's going to be a lot of moves. So I'll be really careful with that. Using my CCI. Remember, guys, if you, yeah, it's hard to say because I can't say it's always. So I really don't want to say that. I won't make that comment because it's not always. It's a lot of it is intuition. Once I see that cross above or below 100, plus or minus 100, but a lot of volatility in non-farm payroll, a lot of volatility in Fed minutes, right? So when you have your monthly Fed report. So you have to be careful with that, right? And because this comes in the morning, let's let the market open, see what it's going to do. The report will come out at 8:30, so we still have plenty of time. So what's happening in pre-market right now really doesn't matter. So I don't have an answer for you as to what we're going to look at today, is really my point. So when I look at the cues, we have this double outside day. We'll have to wait and see what happens at 8:30, how the market moves, and really not until the first 15, 30 minutes of the day to see if we're going to see a continuation off this outside bar or a reversal. Today is also a new 3-day candle, guys. You got this little hanging man pattern here. Certainly could trade back to the downside below this range, right? So if it takes yesterday's low, that's the low of that 3-day range, and we could see a potential move back to the downside. Now, what does that look like? So Tesla reported that, and you've seen this with other companies, right? If you've been watching the news, several companies are starting to look at this economy, and I think Bloomberg reported. Let me share with you what I read from Bloomberg. Tesla jobs, and it says, and right on cue, Tesla CEO Elon Musk said the electric car maker needs to cut staff by around 10%. 10%, noting he had a super, and they put this in quotes, super bad feeling about the economy, according to an internal email seen by Reuters. The company employs around 99,290 people worldwide, so job losses approaching 10,000 people are possible. That comes after he urged everyone at the electric car manufacturer back to the office, saying in emails to staff that employees were required to spend a minimum of 40 hours in the office a week. Tesla shares declined as much as 3.7%. Well, it's down a lot more than that right now. So here is my comment on that. So my buddy Jim, who follows me here in the morning, will tell you that my role at the company that I worked for 12 years, and 10 of those years I spent in IT, finance, and governance. And when I heard Elon Musk's comment about the people, our employees need to return back to office and need to spend at least 40 hours in the office, my first thought was, that's a management move to reduce headcount. That's a strategy. And so when I see this post about now him saying, yeah, we're going to probably have to cut costs 10%, like that just kind of confirmed what I was thinking. He's looking to cut costs without having to pay, if you will, right? Yeah, I don't have to lay people off. Let me just get them to quit. So here is here's the real though, guys. If you think about what we're seeing, and this is why I'm cautious on longs, and I've been saying this for a while now. If the Fed is going to be aggressive and reducing the balance sheet and raising rates 50 basis points for a period of time, so we'll see what the non-farm payrolls say today. But remember, that's a lagging indicator. These layoffs that we're starting to read about aren't in that report. And so if the borrowing costs are going to increase, and we're a consumer-driven economy, and consumers' spending starts to decline, productivity declines, what does that's a domino effect, right? That's economics 101. And while the Fed is, will likely try to not draw us into a recession, but we have to think about the possibility of that happening. And so what does that mean for corporations? And so the back half of the year, right? Remember, we're in June, guys. We're ending this first half, and and the CEOs and their quarter earnings, a lot of them are not real thrilled about what they're seeing in the back half of the year. So in their minutes, right, their feedback to analysts is not so rosy, a little gloom. So with that in mind, we have to think about that as traders. So don't get too caught up on a direction in this market, I guess is really my message. Don't get too caught up in a direction in this market. We have to be fluid. We have to be flexible. We have to wait and see how the market is setting up. Maybe do some scalps, get in where we can, get out where prices hitting our broadening formations. Okay, don't get too excited, because I think the back half of this year may just not be that great. I'm sorry. But here's what we're seeing now on Tesla, guys. Again, we have this 2-up day on our 3-day pattern. Today is Friday. I am not going to be supercharged in this market. Let's see how it opens. Again, waiting on non-farm payroll, but price trades below this low. We drew these broadening formations off the monthly. So maybe it trades back down. If this sucker trades back below 700, guys, we may just see this thing retest, but I have no idea what it's going to look like just yet. Okay. All right. So that's what I have for today. Let me look at, let's see. Do you guys want to draw Tesla? Let's see. Oh man. Yeah, it is. One's all the way up. Two. Yeah. This was the real move right here, Jim. I was like, bam! You got to get in here. You got to get in here. If you can, again, once this crossed back over, and this was your 15-minute flip, I'm always cognizant of, even though I love my time frames here, I'm always cognizant of the time. This is just simply my ranges. I love trading these ranges, but I'm always cognizant of the time of day. There's a difference. Okay, I like drawing my broadening formations on these ranges, but when I look at the 3, which is why I flipped back to the 3, because I was like, man, still too many triangles. TTOs, and I started just focusing on the shorter time frames, using my 90 as my BFs, and saying, you know what, I may only have 18 minutes in this trade, or 15 minutes. And so the market is just way too volatile right now. So let's look at what that might look like today. But yeah, it has literally, Jim, given back all of its, this is just crazy. Well, I know I'm going to trade it, so I might as well draw it out. Let's start. Let me blow this up. Let's see what I want to do here. It's Friday, though, guys. It's Friday. I'm not going to get too excited. So we're going to draw this from the high of this bar to the next highest bar inside this range. Let's see, what is this? 791.53. So basically we're saying it's got to take the high. And the reason I say that is, if it were to trade higher, this is your 3 bar. If we draw, and we'll draw this as well. You got this 3-2. I don't want to be inside this range. So essentially, if I'm going to go long, it needs to take the high of the day. And this is a big outside bar, guys. So we'll see what happens, but it needs to trade the high of the day. Otherwise, I'll stay out of it. And then I'll just draw this broadening formation. I'm going to draw this here. If it trades below this range, we'll certainly look for short opportunities, because we got this 3, 2 up, 2 down, the way I would view it, but big outside bar here. So I'd be careful with that. All right, so it has to trade above this range to go higher, below this range for a potential short, but we got this 2-up bar here. So I'm going to draw this broadening formation off this 2-up bar. And I'll say, yeah, next highest bar. So basically below this range, because we want to go 2 up, 2 down. You got this inside bar here. So below this range, potential reversal, we'll look to go short. Stay out of this range up here. We got this 2-up bar here. We want to stay out of this range, basically out of this range. So 2 up, 2 down. So this is where I'm looking to go short below this range here. Actually, I'm gonna draw this differently because I want it to go 2 down. So we'll use the same trend line we used before. So below this range. The reason I drew this downward, guys, instead of upwards, is because I want to trade a 2 down position trade. I want this to move to go downward. So I want it to trade below a downward trend line. So it needs to stay below that. You see what I did there? So if I did it this way, then there's a potential it could trade below this range, but stay high and maybe chop us up. You guys see what I did there? When you draw it, a broadening formation, you're looking to trade the reversal. And this is, again, one of my nuances that people aren't talking about. This is your broadening formation, right? And so you're looking to trade this when it hits there, trade a reversal. But that doesn't necessarily mean it's going to trade down below that. There could be some resistance or support levels there. So what I'm saying is I'm going to do it this way. And so once it trades below this range, now I'm looking to short. So instead of shorting up here and getting chopped up until it crosses or not, I want to wait and for it to trade below this range, and now I want to enter. And here is where I get my CCI support confirmation. And not support, but CCI confirmation. That's when this generally happens, guys. Whew, man, I gotta put this stuff on paper. All right, so we're gonna short below here. And now we're looking, if we go short, now we're looking for how far might this go. Let me see if I can draw broad information here. If this thing shorts, so right now you can already see, all right, this was yesterday's open. It's already trading near that. Like Jim said, I mean, it's literally in pre-market is already taken out this entire range. It's just crazy. It opened at 732.47. It's at 736. This is Tesla. All right, but remember, guys, it's 8 o'clock. There's another 30 minutes before the non-farm payroll data, and then another hour after that before the market evens open. So this doesn't tell us a whole lot right now, but this allows us to plan our day. And so we'll see what happens. So just keep your eyes on that, see what happens. But if it takes yesterday's low, let's see what can happen. All right, so you got that guy, and you got this guy. All right, let's see what the low of that is. 720.53. And I want to take that here. All right, so we're just going to stay right here in this range, guys, because it's coming back down. Well, if it comes back down. So you got to take that 2 down bar. Where's our next 2 down bar? Here, here. And we're just going to take these 2 down bars and draw broad informations. We got 2 down bar here. Here, we've already covered this one. We got this 2 down bar here. We kind of got that covered. We got this 2 down bar here. So I'm going to draw my broad information here on this 2 down bar. Let's see how I want to capture that. Too far. Nope. Nope. Here, let's see if there's a, oh, then you're inside this big range here, guys. We won't go back. I'm not going to go back farther because you can see where we are now. in pre-market. This was that low in February. So we're in this range, guys. We're in this range. This was that monthly low. So we're just gonna see how we got this two up, two down right here. We got this two down guy right here. That'll take that, that'll cover this range and this range. Two down, two up, two down here. Depending on the time of the day, that'll be pretty close. Did you see that? Did Tesla really just gap up? Okay, guys, I don't know what's going on in pre-market. This is why I don't fool around with it. I don't know how guys trade the futures. It can be done, I guess, but man, I don't know what happened. That move went up or down. So two down here, that'll pretty much cover that range. So we'll have that covered. And then we have this two up bar, this 3-2 here. And we got this outside bar here. So what I'm going to do is I'm going to draw this line from here to here in this outside bar. And then you have this range. So let's see what happened, guys. But the way I would look at this is price has to trade. And so we'll write this up. But keep in mind, this is NFP day. And when I see, let me just see what that looked like on the pre-market. That was weird. Look at that spike. That's what I saw. And I'm like, what in the world happened there? Yeah, that's kind of weird. Don't know. And I have people asking me if I use pre-market data to draw my broad informations. I do not. This mess right here, I'm sorry. I can't even tell you how to do that. I do know that my buddy Ramon uses, and he did a fantastic job. Talked about ranges, and he uses pre-market data. He did that weekend review with Jermaine on the weekend shift, and I have to tell you, this troubles me. This would throw me all off. And the other reason I don't do it is because it throws off my CCI. So I don't use pre-market data. So I don't know what that was about, but so I'm gonna be careful, guys. But here, let's just type this up real quick, and yeah. So what happened here? Did they remove something? Where's my drawings? Hang on. Sync layout. TradingView did something again. I'm not exactly sure what they did here. All right, I used to be able to remove, because I don't want this on all of the boxes. So I don't know what they did here, but we'll just draw it up. I'll type it up. So long above yesterday's high. Just put the date in here. It's a high long above 792.63. We'll call it 793. And price holds. All right, because if it comes back in, guys, if it trades above this and comes back in, you have to get out of that trade. It's not worth the TTOs on a Friday, cheapo option Friday, where you have 0 time value. Okay, theta is going to hurt. Theta is going to hurt. All right, and then we're going to look for a short, and below, we'll call it 746-ish. Right, so this is 747. We'll call it 746. We'll be inside this range, but we want to go short with CCI. Short below 746 with CCI, below -100 on 18 minute. All right, so that's how I'll look at it. But we still need our actionable signals. All right, so actionable signals on that 3-minute or the 18-minute. Okay, that's going to be my look for today. It's Friday. Like I said, I don't like the way the market, don't like this. I don't like this inside a double outside bars. So, but today is a new 3-day move. We get all day puking, yay, I'm in. But so keep that in mind. If the broader market is puking or going straight up, okay, we want in. We're going to look for our entries, like we have here, 222s, 322s. If we can get them, if it goes 2222 like we have here, we're asking ourselves, what's the next 2 on this 18-minute, and we look for our inside bars. Okay, like we did here. We're not shorting here. There's no reason to try to short here. We're going 2 up, inside bar, 2 down, 2 up. Get in there. That's how we play this. What's the next 2 if things are still good on the longer time frames, and you can certainly use the 15 and the 60. All right, so we're going to close with my script, guys. Proverbs 21:5, the plans of the diligent lead surely to advantage, but in everyone who is hasty comes surely to poverty. No reason to be hasty. Absolutely none. All right, I appreciate you guys joining. I hope you had a great training week, and if you were able to trade, you were able to see some rewards. But keep in mind, the market will always be here. Don't worry about it. If you missed it, there will always be another time, another opportunity. Learn from it and keep using, practicing due diligence, and you'll get there, guys. You'll get there. Don't beat yourself up. It wasn't easy for me, and I would venture to guess it's not easy for most people. All right, take good care, everybody.